Welcome to Web3 Watchdogs, the podcast that takes a deep dive into the world of Web3 security, compliance, and risk. Join Michael Pearl as he interviews executives from across the Web3 industry to uncover the challenges and opportunities of this rapidly evolving space. Web3 Watchdogs is sponsored by Cyvers, your one-stop shop for Web3 security and threat mitigation. Cyvers harnesses the power of AI to eliminate hacks, scams, fraud, and compliance challenges in real time, and even before they happen. For more information, visit cyvers.ai. That's CYVERS.ai.
Hello, everyone, and welcome to the Web3 Watchdogs, the podcast that focuses on everything security, fraud, compliance, and everything related to safety and security in the crypto space. And with us today is Dmitrii Emelianov. Dmitrii is a fraud prevention expert with over a decade of experience. He currently serves as the head of fraud prevention at Sumsub. And previous to that, he served as a fraud prevention manager at several companies, including Yandex. Dmitrii, thank you so much for being here.
Hello, Michael. Hello, everyone. Thank you for having me today.
Perfect. Is there anything I've missed in your introduction? Anything that you would like to add?
Yes, you were pretty right about my career track. I just wanted to add that my track is pretty wide. Speaking about domains, I have worked with finance, traditional finances, with internet banks, card processors, with retail companies. And at my previous occupation in Yandex, I was working as a fraud prevention manager in advertising. So here at Sumsub, I'm covering anything connected with fraud prevention because our customer network is pretty wide and domains are also pretty widespread in different industries. So thank you.
So maybe you can tell us a little bit more for the sake of the people that don't know that much about Sumsub, what Sumsub is doing, which clients you're serving currently.
Yes, I'm sure that people know well about us as a KYC company, and the majority of our customers are from crypto, gaming, forex, and trading companies, but we're not limited to them. We're working also with fintech companies as well. Speaking about fraud prevention, we offer a pretty big variation of services, starting from onboarding and transaction monitoring and in device intelligence as well. So I believe it's a pretty wide spectrum of protection we can offer.
Yeah, for sure. So I saw a post of yours a few months ago saying something like that. So there are two general questions that fraud managers should answer daily. Am I overbanning or am I underbanning? And I'm sure that many of our listeners can relate to that right now. So what's your take on that? How can you square the circle? How can you balance between those two edges of the spectrum?
Well, that's a very good question. And in my estimation, it's much more deeper than it comes at the first glance. Let's just delve deeper into it. The majority of fraud prevention platforms are blocking something, whether it is transaction, accounts, logins. So that means that we, as fraud prevention managers, can influence both good and bad players at the same time. How we can bother them? We create additional friction. We already asking for something to pass additional challenges, additional checks, etc. And overbanning and underbanning questions are about whether we influence actors which we want and we are allowing to live their good and calm lives for the good players. Let's just play a mental game. Let's just fantasize a little. I will try to explain what I meant. Let's imagine that I'm making a remittance in favor of a counterparty. I sent money already in favor of that counterparty before. Can I consider that that counterparty is trustee of mine? How do you think? Well,
Good question.
It depends, right? It depends on several factors. The first one, when first I met that counterparty before. 1 hour is one case. 6 months ago is another case. What I did with that remittance, did I block it or not at the moment? It's very hard to say at the moment whether was it a good action, a bad action. Let's continue and look at a login from, let's say, a new device. How much time should pass before I can say that that device transforms into a trusted one. What should I do? Just confirm it using OTP, or should I have some turnover, which I committed from that device in particular? Those questions are essential to decide what metrics, our internal technical metrics, we should use to answer the questions: how many bad actors have we blocked, and how many good actors have we blocked? And it helps us to weigh how good we are at the moment. The main issue is that all those metrics needs time to ripen, right? I think you are aware of traditional finances and
Yeah.
chargeback concept, right?
Yeah.
It takes from 2 to 3 months to get mature, right? to settle down and decide that month in particular was pretty good, pretty bad. We have to tune something inside our logic. The goal of those questions is to help fraud managers to ask themselves that kind of question, to make that period of decision shorter. If we find those factors and metrics which allows us to decide at the moment without waiting for metrics being ripened, when we're doing something good about it, we are going to success, I believe. What do you think about it?
I think that it takes a lot of pressure to adjust that all the time. So I'm imagining that, for instance, you mentioned that you have to wait 3 days, and I'm guessing that that is something that you have to adjust all the time, and also you have to adjust it as per the industry, right? Because crypto is much more high frequency, and I can imagine that the pace of things and the validations that you need to do are much faster, right?
Exactly, from one point of view, from another, no, because they're completely different, and we have different sources of signal which we can use to decide what we're doing wrong and right. In crypto, in traditional finances, there are different sources. So yes, you're completely right.
Interesting. And let's switch the conversation to the actual fraud, right? We talked about the fraud prevention, and we'll dive into that in a second. But I'm curious to hear about interesting fraud tactics. I mean, we all live in a world where, we all hear about pig butchering and phishing and scams and rug pulls and so on. Fraudsters are super creative and innovative. What kind of new trends can you tell me about that you are seeing at Sumsub and within your clients that are currently trending, so to speak?
Well, I will not invent anything today. Let's just set aside uh, decentralized platforms, right? Because they're just the other case, and let's speak about classical crypto and other Web3 projects. Let's also forget about big APT attacks and stock-like manipulations, because it's not just the consumer side, right? And we're focusing mostly on consumer side at the moment. So speaking about consumer side, this is always scams, phishing, and everything which is suspiciously similar to classical financial world, in my opinion. That means that we see the classical schemes and the same vector of attacks, but the key difference here is that in classic financing, traditional financing, the onboarding process is biased towards the presence of the customer. It's much more easier in Web3 world just to create onslaughts of attacks, right? We can generate users, we can generate synthetic identities, we can manipulate with our real consumers and get in contact with them using that fake identities and letters, emails, personalized texting, even voicing. So this is what we see at the moment: scams, but with slightly different change to land it in crypto world.
Yeah. And obviously, the technology that we have nowadays with the emergence of AI is something that is assisting the scammers to scam, right?
Yes, for sure, for sure. Yeah, I won't say that it changed the techniques completely, but it made much more easier just to scale up attacks itself. I would call just a brute force of nowadays. I think that's correct.
Yeah, for sure. And also the scale of things is something that is crazy nowadays, right? Because when you can reach that many people and you can automate processes, then it just makes it really hard, to counter that.
Yes, for sure. And taking into account the tremendous amount of data breaches, you just know the contact details and all personalized information of the customer. You can just try to reach them out, maybe the customer of some particular organization. It's easy just to iterate over it. Yes, you're right.
Yeah, for sure. So one of the biggest claims to fame of Sumsub is the travel rule. So travel rule right now is one of the biggest issues. We hear it among the compliance managers and the fraud prevention managers and so on. Can you explain, for the sake of people that are not familiar with the term, in layman terms, right? What is the travel rule? Who needs to apply it? How does it work? And how can a crypto company stay compliant with respect to that?
Well, it's a pretty good question. Why I think so? Because previously I have mentioned several times that I've been comparing Web3 with traditional finances. And in my opinion, travel rules is a good example how it happens in particular. What is it in general? In a nutshell, it boils down to knowledge of a sender side where we transfer the assets. We need to know who is that person, and that person needs to know not that person. The receiver's organization must compare. Is it true that person exists in real life? And it looks pretty similar to traditional wire transfers, isn't it? So why I think that it's pretty similar, because in my opinion, crypto now is going into traditional financial shoes. And what we see at the moment is the legitimization of crypto worldwide, but from the aspect that it is legitimate if it's compliant, right? And to be compliant, you need to do those procedures. You need to know from whom to whom you're transferring the money. That's it in a nutshell.
Got it. So basically, you need to know what is the origin of the funds and what is the destination of the funds, and you need to document it to actually make sure that the funds originated from the right place and not from some sort of a fake identity or fake entity.
Yes, that's correct, but not limited by that. We can use fake identity, right? But the main goal of it is to track the origin of the money. If you're going to use somewhere else, these travel rules could be used just to prove that the assets are legitimate. So in that case, it's pretty similar to the real fiat money, which you're transferring using the traditional players in traditional finances. And that is why it brings a lot of benefits for real people from one hand. From another hand, it's completely mandatory the idea of Web3, right? That means that there are several players truly decentralized. We're not compliant with that. We're going to see several obstacles like we saw before. I think 10 years ago, right, when crypto was I would call it marginal. I'm sorry if I offended someone. But today we would see the same regarding decentralized. There are just additional hurdles which people need to overcome to use it.
Yeah, I think that we'll see kind of two parallel universes. We already see them, right? You have the regulated crypto, which has, many restrictions and things that they have to comply with, which are primarily decentralized exchanges, but also payment service providers, on and off ramps, and so on. And you have the DeFi space, which is, again, in some cases, it's compliant by decision, with some sort of a self-regulation. But for the most of it, it has no rules and no boundaries. And also, and maybe you can talk about that, there's the world of centralized exchanges and centralized entities who are not really compliant, right? Because we see that the majority of the money laundering is happening via those centralized exchanges, but not the regulated ones, right? Usually not the Western centralized exchanges where all the money flows into. So, for instance, we just recovering from the Bybit hack. And all the posts that you see right now on LinkedIn, on Twitter, and so on are around the money laundering of those $1.5 billion. And you can see the money flowing into those centralized exchanges. Some of them are small, some of them are big, but not really known. So what's your take on that?
Well, here I would come back a little from DeFi to centralized. I think that money laundering would happen regardless there are KYC on it or not, because making parallel with traditional finances, we've seen a lot of money laundering, morphine, all those kinds of illicit activity there. There's no difference speaking about centralized exchanges, right? No one can't stop fraudsters from buying identities, real identities somewhere. This is what we see in Sumsub. We see that people buy meals somewhere. They have real identity and they can pass KYC because their identity is real. They have identity numbers which are valid. So you can do nothing with that, but they are united by some ring. So, in my opinion, those travel rules, this is just additional barrier, but it can't stop money laundering by itself, right? You have to keep it monitored like before. Nothing changed for fraud prevention and compliance officers. Nothing. You just have additional source of information, but on the other hand, you still have to work with identities, whether it is faked or not.
Yeah, so let's talk about those identities. And one of the things that you're doing, as you said, are KYC processes. So we know that nowadays, and again, we talked about it briefly, that it's very easy either to buy an identity, to buy, a virtual identity, or even to invent one, right, with the proper AI tools. How do you manage that from your point of view for your clients? Because if I am a centralized exchange, and I'm working with you for the KYC process, and then a person comes up with a fake video of proof of liveness, right, and a fake ID that looks 100% legit. How can you counter that nowadays when the technology is so progressed?
I would split that questions into technical side, process side. So technically, in my opinion, this is eternal race where fraudsters compete with good guys like we are. So this is the technical side of the issue, and there would be ups and downs here. But Sumsub can detect fakes, can detect deep fakes, can detect some editions and editors take place on pictures and screenshots. This is technical side of the question. The process side of the question is that, in my opinion, KYC process doesn't end on onboarding. What do I mean? After you pass KYC checks, you commit some actions, you transact. That data has different features like metadata, like geolocation, email address, phone number. You can see from which location the transactions are having place and from which location the KYC process has been passed. If you see something strange, you always can ask your user to pass some check again. It could be either liveness or some video identification again. Yes, it is friction, but doing that, you can make sure that that user is exactly that user. This is not a synthetic or bot activity. Let's imagine that this is a synthetic activity, right? The person does not exist. Then it would take suspiciously long time just to create that video, for example, for video identification. And using that in combination with the technical side of the question, which I mentioned in the very beginning, you can make sure that you can reduce and mitigate the number of fraudsters who are using the platform. Yes, you will touch a little as a false positive real users. But I do believe that I won't be offended if someone asks me to pass liveness again, because I consider it as additional protection of my own account. And if I trust my assets to some centralized crypto exchange, I would be happy if they pay additional attention to my security, frankly speaking. How do you think?
I totally agree with that. The only problem that I see here, and that's kind of something that we see nowadays, even me personally, right? You can see that so many messages and phone calls approaching you from Binance, from Bybit, HTX, whomever, saying that you need to do the identity test again, and basically trying to get an access to your funds and to your credentials. So that's another complexity. I totally agree with you. Me personally, as a user, I went through those processes several times. Only now, when you're explaining this, I understand the reverse engineering, and I understand that they're doing kind of a revalidation, which is very healthy. But I think it brings us to the next problem, which is impersonators of those exchanges trying to target you, right?
What do you mean trying to target you? Someone is bothering you, registering with additional calls and trying to contact you, or something else?
No, so let's say you're a client of Coinbase and you're getting a phone call or a message from Coinbase. How do you know if it's the real Coinbase or an impersonator from, a fraudulent network trying to steal your credentials?
Yes, I get the question. Uh, First of all, I believe that the integration of such procedures must be done using your own domain or your own application with integrated something inside, like Sumsub do, for example. We offer several SDKs which could be launched and triggered right through your own application or website. User doesn't need to go somewhere else to get in touch with someone else using external channels of communication. You're just trying to log in. You see some panel that you need to pass through additional controls, and that's it. I believe that by reducing the number of communication methods, you protect your customer more thoroughly than you're allowing your own support to contact it phoning from different numbers and even virtual phones, etc. But here, in my opinion, I want to compare it again with traditional finances problem. Why all those phishing and scam attacks have place? First of all, because of data breaches and leaks. Second, because there are no limitations how support can get in contact with a potential victim, and the lack of awareness of the end user. This is all that have place speaking about crypto. If you care about your customer, you have to do exactly what the traditional finances have been doing for decades. That's my opinion.
Yeah, definitely. I totally agree that it's one of the responsibilities of the centralized exchange to educate the customers about the tactics of the scammers and what they can expect, what to do and what not to do. Definitely agree with that. So we talked about the off-chain element, which is obviously, for instance, that's very interesting to hear that you're checking where the client is logging in from, right? So maybe if they did the KYC process from Brazil and they log in consistently from China, maybe it means something, and then you want to check it. But let's talk about the on-chain behavior. What kind of tests or validations should be done to prevent fraud on-chain?
Well, that's a very good question. Again, I would come to analogy with traditional finances. We have witnessed to the several acts protecting from APP, authorized push payment, right? And when we speak about on-chain, what comes to my mind is that in distinction with traditional finances, crypto has a lot of advantages here. Why I think so? Because everyone could see the destination point. Everyone could run the appropriate checks. Everyone could decide what is going on, whether it is some scam in place or whether it is a legal activity. The user just trying to fill their own wallet at the moment. In my opinion, that's where people should pay more attention, avoiding that kind of illegal activity. Yes, that's right. Speaking about outbound transactions, let's imagine just to continue our mental experiment, right? I've topped up my wallet and I'm trying to make a remittance to someone else's account. So this is the same. We know what we can gather together a huge piece of information. We can do a lot of decision based on it. And if we just consider all those steps together in one chain, and the following outbound transaction, this is a huge piece of very useful information. And we can block every single step of it, starting from onboarding, topping up, and remittance. In my opinion, that advantage is crucial. The crypto players must use it every time. What do you think about it?
Yeah, I totally agree with that. I think that it's important to understand, and it's a very good point that you're making, that in the sequence of fraud, there are many different, let's say, milestones where you can stop it, right? So you mentioned the remittances process, and I totally understand how it works. With respect to APP, just to follow up on that one, the biggest challenge right now that we see with our clients is identifying the destination wallet and flagging it as such. You're right that everyone can see where the funds are going to, and presumably you can track the fund later on. But with the complexity that we see now in the blockchain, especially with the emergence of DeFi and very complex dexes and aggregators, and I'm not even talking about going cross-chain and swapping tokens and so on. At the end of the day, most services just lose track, and eventually the track doesn't lead to an APP fraud network, right? And this is the complexity basically that we're seeing right now with our clients of tracing those funds and flagging this wallet. So that's in theory it works, but you need to have the proper tools to actually trace the transactions. And by the way, to flag the entire network, because it's only one wallet, right? And if you want to work on scale, you need to flag the entire network to prevent the future fraud from happening.
Yes, completely agree. But let's just add several pieces here. In my opinion, if we're speaking about centralized crypto, and we are seeing that, for example, our user is topping up using a real-time payment method, right? And right after that, he's transferring money to someone else. And we cannot track it. And we have some troubles tracking it. So maybe APP is going on. And that's a very interesting difference, because in traditional finance networks, this is only payment systems who are able to track the destination point and make decisions. A single separated bank can't do it. Just average PSP can't do it, because it doesn't see the whole network. In crypto, we have much more chances just to find out the final destination of the payment. And if we can't do that, well, maybe this is just a part of our policy, just to prevent user from it. Or maybe we want him to fill some questionnaire to be protected in future disputes with him.
Mm-hmm.
Or maybe we can use some very sophisticated tools to find out what's the final destination. You're completely right in that.
So you just mentioned, disputes, and basically that brings me to the final question of the liability of the systems, right? At the end of the day, until now, the systems have to remain compliant with respect to AML and other issues, but with respect to fraud and scams, for the most of it, the centralized exchange was only protecting its users out of sheer goodwill, so to speak. But right now, we see quite a few regulations around the world. In the UK, you have the APP fraud, and in Hong Kong, in Singapore, in Australia, in the US, we see emerging regulation that places more liability on the exchanges, and eventually, exchanges can lose a lot of money for facilitating fraud and scams. Where do you think it's going? Are we going to see this wave of regulation around the world? Are exchanges going to lose money over that extensive regulation? Or is it just small steps that will eventually not really work because it's not doable?
Or I believe it will work. So why I'm so convinced about it? Because I remember the days when there were no any kind of fraud prevention for internet banks. What happened after that? Well, first, some transaction monitoring in detection mode appeared. After that, real-time fraud prevention appeared with some actions and challenges on transactions and account holders. After that, reimbursement guarantee appeared. After that, multi-layer defense appeared, including device intelligence. And we see everything about it in crypto already.
And may I add on top of that insurance as well, right?
You're right. And now we see that APP is appeared, and it influenced mostly traditional finances at the moment. But for me, it's suspiciously similar, the path that traditional finances has gone through, the path which is crypto is stepping in at the moment. But the important outcome here, in my opinion, is split, centralized and decentralized. Centralized will go in its own life, for sure, but if we're speaking about centralized, which have to be compliant, I believe that there are going to be disputes and chargebacks like in traditional finances. I strongly believe.
Very interesting. So, Dmitry, on that note, we'll wrap up the conversation. Any final words, any advices that you want to give to young fraud managers? Anything that you would like to suggest? Where can we follow you? Where can we read what you're writing?
Well, unfortunately, no single source of information. I follow several guys and several blogs on LinkedIn, and I read their letters. I'm very fond of Jan. He's one of my best, and if you're watching it, you're every Saturday. Speaking about my thinking, how things are going now, I believe that the times when a single milestone of control was enough has passed away. Today is the day when we need to follow the user during his customer journey, starting from onboarding, finishing the termination of his account. This is the only way how we can thrive as a fraud prevention vendors. That's it.
Very interesting. Dmitry, thank you so much.
Thank you for having me, Michael.
Web3 Watchdogs is sponsored by Cyvers, your one-stop shop for Web3 security and threat mitigation. Cyvers harnesses the power of AI to eliminate hacks, scams, fraud, and compliance challenges in real time, and even before they happen. For more information, visit cyvers.ai. That's CYVERS.ai.